All right, so we're going to talk today about the regular and predictable pullbacks from a trend. I get a lot of questions from people, particularly they're trend traders, and they have always learned or heard that the trading the trend is the safest and easiest thing to do. My experience was quite the opposite. Trend trading was invoked quite a bit of stress, and I was not successful at it. But what I noticed in the process of studying trend and trend trading is that there are regular and predictable pullbacks from that trend. And so people ask me, are you a counter trend trader? And I wouldn't necessarily say that. I'm not trying to go against the trend. We're working within a trend. All trends, if you remember from our event on Thursday, all trends have a series of pushes and pullbacks on the inside the trend. Well, if you look carefully enough, you'll notice that there are regular patterns inside that trend. And if you understand the patterns, you know what's about to happen next. And that's what we're really good at. And we're really good at it, and we've been doing it a long time, so we've been able to simplify the process. We're going to talk about that whole step-by-step process today. Okay? So quickly, I want to go through this so that you understand what it is that we're going to be doing, and what we're looking for and what the indicators are telling us. And then we'll go to a little workspace that I have set up for a training session so that I can show you different scenarios of trade setups, and then you can ask me questions. I can set up scenarios for you if you have questions and answer how I would handle that particular setup. Okay, so let's start out with the very first step of qualifying a trade setup for one of our trades. Okay, and we're going to be talking about here the trade we call the Rockstar trade setup, and I'll go into more detail that up in just a few minutes. So what we're looking at here is we want to have the very first qualifying factor that tells us, hey, we might have an opportunity here. The very first qualifying factor will be when price has been somewhat channeling, and then we break out of that channel. Okay, so we're looking for a breakout from the channel and then a strong push almost straight up. Okay, and you see these bars, how they're changing colors. These bars are our momentum indicator. Okay, and will tell us that exhaustion is likely imminent because momentum cannot be sustained indefinitely. Okay, so the lighter the bars get, the higher the probability that exhaustion is going to be setting in, and that's very important to us. Exhaustion is very important. So the breakout from a channel is going to be our first alert to pay attention, and let's see if we make it to step 2. Okay, so step 2 is going to be identifying weakness in price. And for us, that's when price is either overbought or oversold. We're gonna show on on our charts, if price is overbought, the outline of this bar will turn this pinkish color. If it's oversold, we have it set to turn this bluish color. Now you could do whatever colors you want. These are user definable. This is how we do it in the trade room, so that you don't have to look away. You'll notice that all of our indicators are right where your eyes are looking. You don't have to go look away to confirm what you're seeing. Everything you need to see is right there. Okay, so we're now on step 2, and we want to say, okay, we've seen some strong momentum. Strong momentum cannot be maintained, and now we're seeing weakness set in. Okay, and that's the indicator we call oboes. Now, so let's say we've got step 1, step 2. They're both in place. We're watching for a potential trade setup. Now we want to see that price is likely being manipulated by the big boys. Okay, the big boys. You know, the HFTs, the high frequency traders, or the hedge funds, or the people that have all the money that can have these big supercomputers and trade these vast number of contracts at an incredible speed. Okay, and that's why this is called speed tick. The speed is what we're watching. Okay, because they know that volume is being watched by everybody, and they don't want everybody to know what they're doing. This manipulation takes place only because they have the ability to place trades very quickly, because they're either inside the exchange or right next to the exchange, because they get certain considerations by the exchange to provide liquidity. Okay, so that the rest of us have something to trade. But if you pay close attention, you'll notice that the orders being processed are being processed at a rate that is faster than us retail traders sitting at home on our home internet, trading off of our PCs, could possibly place trades. Okay, knowing the number of traders in the market at that particular time. Okay, so when that happens, we want to know when this manipulation happens, and we're not going to do anything about that manipulation. We're going to let it happen, because remember, on Thursday, we talked about the fact that reaction to the market is what we're looking for. We know what's going to happen next when the markets choose to react to this manipulation. And the funny thing is we react the same way every time. Okay. Now there's different threshold levels for these speed ticks. The ones we're looking for are going to be the threshold 1 and threshold 2. These are typically the ones that will be generated by a single manipulation, an HFT or a quant, or whatever mechanical manipulation is happening. So these are the ones that I'll typically be looking for. Sometimes they go a bit beyond that, and the speed at which the orders are being processed are we're kind of not sure if it's a single manipulation or these HFTs or hedge funds or quants, they're fighting against each other, which is possible. So that could increase the speed to a point where we might want to be a little bit careful. Threshold number 3 has a different circumstance. That's when the orders are going through so fast, we don't really have a good handle on why the orders are going through so fast. It could be manipulations, or it could be something else. It could be a news event, whether it be scheduled or unscheduled, that causes price to or the orders to be processed much more quickly than what you would consider to be average. Okay, and that's what everything that we do and what most trading systems are about is what's typical in the markets. So when things are atypical, then we have an opportunity. So we're looking for step 3, to see if price is being manipulated. We also have an indicator called the ricochet. This is based on the same information that the speed ticks have, but rather than a speed threshold of the orders being processed, it's actually an acceleration of orders is what we're showing with a ricochet. Okay, so the ricochet is used a lot to confirm. It's used a lot for confluence, and it's used in one of our setups that we're going to talk today called a naked speed tick. Okay, so we're up step 3. We've got a speed tick, and we're showing weakness, we're showing strong momentum, but we still don't have a trade set up. Okay, there's a couple other things that could be going on inside this bar. Ideally, these things will be going on before placing a trade. Inside each bar, we're measuring how the volume is coming in. And we can tell when volume is coming in a certain way, and then something starts happening. Price starts kind of churning. You get a lot of buying going up, and then suddenly the sellers jump in. So you notice that this was called laying in wait. This topic here is called laying in wait, and essentially there were sellers sitting up in here in this area, waiting for price to get up in here. Now these buyers don't know about these sellers that are sitting there. So we're measuring the way the volume is coming into this bar, and if it comes in a certain way, we're going to print this right here. And there's several different thresholds for that indicator as well. We have a 1, 2, and a 3 that'll print, and that'll tell you can qualify that trade based on what type of price action you want to see inside that bar. You have a churning action, a climax action, and a bar that would be a combination bar. I personally I don't care which one is on there. It could be any of these, because that's a good indication that price is going to pull back. Now, these traders that are up here waiting potentially have resting orders, but then again, potentially they're not sitting there resting. They're just waiting for us retail traders. Okay, so it's like we're just cruising along, and all of a sudden here they come, and whammo, they basically attack, and we have no idea that they're there. And next thing you know, price starts to drop. Okay, now we want to see good, strong potential for exhaustion, and to see that, we're going to want to see this breakout. And you'll notice the size of the bars as we start to increase in price. The bars go from relatively normal, just regular bars, and they start getting bigger until you suddenly have this upthrust bar. Okay? This is going to be indicative of major exhaustion setting in, because like in most things, you cannot sustain momentum. And if you go look at any chart, I'll show you something here in a few minutes. Go look at any chart, you will see this happening over and over and over again. That you'll see this sudden push and then exhaustion set in. So when I look at this, I'm thinking of, something like this poor girl, she's doing everything she can. She has run as fast as she can, and that's it. That's as far as she can go. She's not going anywhere else for a while. She's totally exhausted. Price does that. No matter what, it becomes exhausted, and that's as far as it's going to go until it has a chance to pull back and rest. Okay? At the exact same time that this exhaustion sets in, we're looking for divergence. Divergence is where our rock star is going to come in. Momentum has changed directions before price does. You notice that runner was still moving forward, but getting slower and slower and slower until she just couldn't go anymore. All right, and here's my favorite example of momentum changing directions on you no matter how hard you try. You just can't seem to get any traction. So for a lot of us, this is our trading account, right? You keep taking one step forward and sliding back 3 steps. So as much as price wants to go up, momentum is constantly pushing price back, and eventually momentum will win, at least to some degree. Okay, momentum constantly winning, and that's what we know is going to happen. That's the edge that we have. Okay, so the only thing we have to do then is just trade it, right? We're going to place a limit order at the open of this bar or better. Okay, sometimes the bar will open and then pop up here a few ticks, and if you can get in here, so much the better. Now, I say a limit order because on a very small trade, we're only going to trade for 5 ticks. I mean, that's what we do in the trade room. That's what I do. There were some traders that trade for more, some traders that trade for less. We're looking for this pullback right here, this few ticks that we have a real good handle that it's going to happen when we have this confluence of events. So we're going to put in a limit order. Now, if price opens and drops suddenly, and you put in a market order, chances are if price is dropping suddenly, you're going to take slippage and you're going to actually get filled down here. And that could have been the whole move right there. So until you become real qualified and work really hard at this, you're going to want to use limit orders only, because the worst thing that could happen is price takes off without you. You get left in the dust here. You missed a trade. That's okay. There will be more. But at least you didn't take a whole bunch of slippage on what we're looking at for a pullback here. Now, I've been doing this a long, long time. 11 years now. The same trades, same setups. So I've gotten really good at, I practiced for a long time, have a lot of experience. And I recommend to people that are going to be doing this for a while, start out with the limit orders. But as you increase the number of contracts you're trading, you can scale in those orders using a combination of limit and market orders. Okay, but you've got to start small. You've got to start learning from the beginning. Okay, so that's the 7th step. There's our point of entry. So what have you done? You've started to build confidence. Now, I don't know about most of you guys, but I never had confidence in my trading when I was trying to be a trend trader. I never knew if price, when it was pulling back, if it was a reversal or a pullback or a retracement. I never knew. It always scared me when price was going against me. And my emotions would run really high and I'd get scared. And sometimes I'd jump out knowing full well that I shouldn't. Sometimes I'd stay with it and get my butt kicked. It never seemed like I was making the right decision. It always seemed like whatever I decided was the wrong thing. So I started thinking, well, if I could just win some small trades, let me prove to myself I can be a winning trader. So I started looking at these small, quick trades just to build my confidence. Turns out it's actually a real profitable way to trade. Nobody had ever told me this before. Okay, people were saying, yeah, you're gonna have to buy low, sell high, trade the trend. But they never told me you really can't make money trend trading on a single contract, because that's all I could afford to trade when I was learning. They'll admit it to you later if you put their feet to the fire, but you cannot make money trading a single contract on 20, 30, 40 tick targets. So once I figured that out, I realized, well, I got to come up with something else. So I started these small trades. And that, 11 years ago, turned things around for me. All right. So before I move on, any questions? We're going to move on to the little workspace I have set up, and we'll show you some scenarios. Any questions? 1 minute. 7 tick stop. So we use 1 minute charts because we're looking for a reaction right now, right? We know we want to stay out of the markets as much as possible. We don't want our money in the markets because the markets are being manipulated, right? You don't know when that manipulation is going to happen. So why do I want to keep my money in where there are people who are trying to take it from me? So I want to trade on a very fast trade. I want to get in and out. Oh no, absolutely not. We do it every day. We trade in the trade room every day. There's about 50 people come to our trade room every single day, and we trade these trades every single day. There's no way it's too fast. And the reason it's not too fast is because we have the indicators to tell us, hey, something is about to happen. You need to get ready. That's what I just showed you in this step-by-step process. Okay? You just have to pay attention. No, we're trading the futures. And so we have specific futures markets that we trade where we have ample time to get into a trade if we watch the setups. Okay? So, and we make sure that we've qualified the setups. We're sitting there on this, if you look over here, on this bar, during this bar, look at all this information. Now, all of this information printed on this bar. This bar opened and looked like this bar when it opened, okay? And as it grew, all of these indicators popped up onto this bar. Now, we're watching this bar, and we're going, okay, we're up to step 6 now. All I need is at the open of this bar to have a rock star, and I'm going to short it right here. So there's no other, we're not looking anywhere else. There's nothing else that we need to qualify that trade. That's all. That's it. That's everything we need right there. Okay, let me go ahead and go over to the workspace. I'm going to stop sharing for a second. Your screens are going to go blank. And I'm going to pull up this other thing. All right. All right. Can everybody see that now? Trades per day. We're going to usually, now there's some days we have no trades because that's just the way trading works. Typically, we're going to have 5 to 10 trades per trading session, which we trade from 9 a.m. until noon Eastern time every day. The trade room closes at noon. So you get lots of opportunities. Now, those opportunities are really based on your risk tolerance. We have some traders that have a looser risk tolerance than others, where I might take 5 trades, other traders might take 10 because they like to trade more often than I do. They qualify the trades a little bit differently, and I'll show you that here. Here's the cool thing about this system. Once you understand what it's doing, and once you've had some experience with it to watch it and learn how to use it, just like any other skill, you can adopt this system to work the way you want it to work, okay? To work within your risk tolerance levels. To maybe you're okay with taking more trades and having taking slightly more losers, but getting more winners also, okay? So yes, we do have losing trades, absolutely. Um, our traders report. Do we have any traders in here that trade with us every day? I think we do. And I'm not sure if they keep this good of track, but if you guys want to contribute to what your winning percentage is, Tim Jackhammer Man. Hey, Tim. Reported to me. Of course, my trading win percentage is going to be really high because I've been doing this for so long. But we have traders that come into our trade room and they report to me they're between 75, 85% winning trades. Okay. And some want to trade more and some want to trade less. Marshall's a good one to ask. He's the one, he likes to keep the data on winning and losing trades. So he's a good one to ask. Yeah, so those are, and the thing is you can take more or less of those trades. So you'll notice here, I have named this the optimal Rockstar setup. All right. Yeah, if an asphalt guy can do it, anybody can do it. So you notice I call this optimal. And that just means if everything possible is in place, this is a perfect setup for a rock star. Now, are the markets always perfect for us? No. Do we get optimal setups always? Absolutely not. We do get them, but we have to make some allowances sometimes. And I'll talk to you about those allowances. Again, those allowances are based on your risk tolerance. And I'll talk to you about those in a few minutes. But I first want to, again, go over what an optimal setup looks like. Now, real quick, I'm going to go over here. And I want to show you just a random chart that I pulled up. And I want you to see, okay, so let's just look at this trend. This is a trend, right? This is a short-term trend. But you'll notice, okay, price is going up, then it goes sideways, pulls back a little bit. Goes up, pulls back, goes up, pulls back, goes up, pulls back. Okay, it's a rhythm, it's a cycle. It happens all the time. On the way down, goes down, pulls back, goes down. Look, this is a downward bias, right? Look at any chart, and you're going to see this. These are where we pick up the information. We pick up the information here that this is about to happen. Then when this drops, this is about. So, this is not just random. That happens sometimes. These pullbacks happen over and over and over again. They will always happen, which is what's nice about what we're doing. It's not like anybody ever bought an auto trader and it works great for a while until it doesn't, or traded a particular trading system that is just awesome, and then suddenly one day it just doesn't work anymore, and you just can't understand why. Okay? Because things change. Now, absolutely the markets change, and absolutely what we do will change to some degree. But we have the ability to tune the system as the changes are happening in order to maintain our high level of success. Okay? So what we're looking at here is price is channeling. Okay, this is very typical. Remember, this is probably an area of accumulation or distribution that we talked about on Thursday. Then we get a strong push out of this channel. And you'll notice the bars start turning colors. They start going from black to a gray, to a lighter gray, to almost white. Remember the runner. The runner, with this overbought condition, that runner has exhausted and run into a brick wall. Right? I didn't show a brick wall in front of that runner that she just couldn't go anymore because she's hit this resistance. This is ideal scenario right here. We see that price has pushed as far as it can. The sellers have been up here waiting for us to push this far and get exhausted. They're not exhausted. They jump in right here, and the momentum has already changed directions. So this bar opens with the rock star, and typically, according to Marshall, 82% of the time, price is going to pull back here. Okay, so this is an optimal setup for us. Now, are things always optimal? No. So what would be, this is the little scenario thing where I can move things around. If we had something like that, actually with it be out. How about that? Now, we didn't have that big push, did we? We didn't have that real strong sense of exhaustion. So this is where, after you have some experience, you can say, you know what? I have enough confidence in this setup for my risk tolerance levels to go ahead and short it right here. I'm going to short this on the open of this bar if it has a rock star on it. Okay? So we call this a 1-bar push. It's still got to have a speed tick, still got to be overbought. It's nice to have this pullback alert, although it's not required. And then we get the rock star. Any questions? Any questions? No questions. Everybody's good. All right. This is called our naked rock star zone. I'm going to put this here, but I'm not going to talk about I meant to have this here before. This is something I'll talk to you about in just a minute. Now, any questions about this or any other scenarios? I told our traders to bring scenarios where they're not sure or not comfortable. What if we had this? Now, I told you Okay, Tim, have a good one. I told you about this big blue speed tick, right? Anybody remember what this meant? This is a quiz. Anybody remember? Possibly. Or something even more. Okay? Yeah, exactly. The big blue speed ticks tell us that that the price in this bar was, or the orders in this bar were being processed so fast that not only is it unlikely that retail traders are trading it, it's it's even more likely that this is generated by a news event or an scheduled or unscheduled, where either people are panicking or these machines start firing off against each other, or basically what it is our inability to understand what it is. So we relax and we just go, okay, I'm not taking that trade. Okay. As it turns out, because of that, we have the Rockstar set up in our default settings. Is if we get a big blue speed tick, the Rockstar won't print. That's the way we do it in the trade room. You can, if you want to, inside your Rockstar, set it so it'll print whether it's a big blue speed tick or not. Okay? Those settings, the speed tick settings, are inside the Rockstar to tell the Rockstar whether to print or not. Okay? Now, what about if this bar opened above the resistance? Is this a Rockstar trade? Wait, let's move this back. Now, we still have a 1-bar push, but for the sake of argument, let's say that 1-bar push qualifies in your trade plan. Okay? Is this still a setup? Without the resistance behind it, is it still a Rockstar setup? It's still a setup. So, Steve, you're right. It's still a setup, but it's no longer called a Rockstar. Somebody, once upon a time, before we started trading what we call naked Rockstars, started calling it that because there was no resistance behind this setup, but it worked anyway. So I wasn't trading it for a long time that way. I was only trading it if it had resistance, but we were missing opportunities because so many times without this resistance behind the trade, this trade would win anyway. And remember, what we're looking for, this resistance, is that brick wall that poor runner just can't make it through. Okay, hard enough to just stand up, but to break through a brick wall too. And we've proven by having this bar, it hits this line of resistance and then pulls back and opens here. This bar just proved, this line, this resistance line just proved to us that people are respecting this line as resistance. So then we have much more confluence to take this and confidence to take this as a Rockstar trade. But over time, we noticed, man, those just work anyway. So we started calling this a naked Rockstar trade. A naked Rockstar trade does not require resistance. But what we do require is one of two conditions to exist for a naked rockstar trade. Now, ideally, we're going to have this. And don't pay attention to the colors of the bars. I'm just, getting this set up. Ideally, we're going to have something like this before a naked rockstar. But again, we don't always have ideal. But we also might have oops, that should have been white. What the heck? We also might have a situation like this, where we don't have resistance. We don't have an overbought condition. We don't have a pullback alert. We don't have a ricochet. So this could be, for some traders that have a fairly high risk tolerance, this could be a trade setup called a naked rockstar. But generally speaking, we're going to want to qualify that with more confluence. We want to see something like a pullback alert up here. What does that pullback alert tell us? Remember, that tells us that this is either a climax bar or a churning bar or a combination of the two. To tell us, okay, on top of all of this information and on top of this divergence, it tells us that the sellers are very active up in here, and they weren't down in here. They became very active in this bar. They weren't active here. They weren't active here. They became active here. Now you might qualify this in your risk tolerance as something that you can trade. Can you guys see my mouse? You guys can see my mouse, right? Okay, I can't. I was looking at a projection, also a projection, and for some reason, I noticed I can't see my mouse. But you guys can, so that's all that matters. Okay, so that's a qualifying factor to qualify this for a naked rockstar. Yes, Mike, we'll send it out. We'll send it out to you. Now, even better would be to have an overbought condition on top of the pullback alert. My rule, personal rule, is I only need one or the other. I prefer to have both for a naked rockstar. But I only have one or the other, and that'll qualify this as a trade that I'll take. And Mike, you just got here. What I'm going to do is on the open of this bar, I'm going to short this. And I'm going to do it with a limit order. Well, I'm going to do it with more than that, but because I trade multiple contracts. But new traders, or until you've mastered this, you want to learn how to do it with limit orders. And you work your way up to a combination of limit and market orders because of the potential for slippage. We're only looking for a 5-tick target here because price channels, it pushes, it channels, it pushes, it channels, it pushes. Now, that channeling or that little bit of a pullback before it channels is our sweet spot. And I don't know, when I place this trade, I'm not expecting for this to be a reversal. Okay, that is not my expectation. See, we have an upward trend here. My expectation is this price is going to keep going up. But I know it can't go up anymore until it pulls back, retraces a little bit, consolidates, and then goes up again. Okay? I know this because I've studied blank charts. This is really easy for you to study too. When we're all done here, go open your platform, go to your favorite instrument, put it on 1 minute candles, and look. You're going to see the same thing going up and going down. It's been right there in front of you all this time, and maybe you haven't even noticed it. But that's an opportunity. And really all you need in trading is a slight edge. For example, we all know about gambling in Las Vegas. We call it gambling. Las Vegas, the people that run Las Vegas don't call it gambling because it's not gambling. It's gaming to them. It's a gaming industry. They're not gambling at all. They know they have an edge, albeit a slight edge, but they have an edge, and they just exploit that edge day in and day out, and they know without a doubt they're going to make money. Their edge is very small. We have an edge here, and it doesn't look like much. It doesn't look like much when you're just going 5 ticks, but I promise you, you can build great confidence. And when you have great confidence, you have the ability to make this a successful system for you. Okay, we have a lot of traders that have been doing this for a lot of years. Okay, so let's go back and look at this scenario. And I'm going to change something here. Is that a good trade setup? Anybody? Anybody? Does that look like a good rock star trade? Why not? Remember, this is called the naked rock star zone. Right? It's in the zone. Remember, we're looking for a strong potential for exhaustion. Does this look like a strong potential for exhaustion? Even though we have an overbought candle and a pullback alert speed tick, this just barely, remember that channel I said? This just barely broke outside of this channel. It really hasn't moved very far. It's still inside this zone. So if I get a rock star and it prints inside this zone, I'm not going to trade it as a naked rock star trade. Too many times this is, it still will pull back sometimes. So it'll just be an opportunity that we just didn't take. We're looking for the highest probability. How about now? We trade that. Some traders will. I will. This is still a rock star trade now. It is no longer a naked rock star trade. This is naked. This is not. We have resistance behind the trade, and the resistance, this price has to hit this line first. before I'm going to use that as resistance. If price never made it to the zone, and then this bar opened here with a rock star inside this naked rock star zone, I still consider this a naked rock star because price hasn't proven to me to react to this line yet. Right now it's just a line on my screen, and price hasn't touched it yet. So I haven't seen that this line has value to the traders that are trading right now. They haven't proven it to me. So I'm still waiting on this. I will consider this a naked rockstar trade, and this open inside this zone. So I won't trade this. I'm going to wait. If price has hit the line and then pulled back and opened below it, well, that's enough confirmation for me that this line has value. That price went up, tagged the line, and pulled straight back and opened below. Okay, makes sense? Any questions on a rock star or naked rock star? There are plenty of scenarios that we can go over if you have questions, but this is the crux of it right here. And we see these over and over and over again every single day. And the interesting thing is I have done, when I was a struggling trader, I went to trade rooms and I do trading sessions or whatever, and they talk about all this stuff that I would never see in real trading. I'm like, well, why? I don't know what to do here because that wasn't what I'm seeing now isn't what I was shown. I saw that all the time. This is actually an indicator. This is an indicator that prints on our charts called the Naked Rockstar Zone, or NRS zone. So that's what determines the zone. Basically, it's just picking up channeling, like a Keltner channel. It's just picking up when price is channeling, and you'll notice that when price breaks outside of a channel, like a Keltner channel, then there are groups of people that will trade the breakout, or there are groups of people that will trade the pullback from the breakout, which is why things often get interesting when price breaks outside of a channel. So everybody's good. There were no scenarios you want to see on a rock star or naked rock star. Now the rock star and the naked rock star are our favorite trade setups because they provide the most confluence, particularly adding in this divergence. So that's a naked rock star. And that would qualify because it's not inside the zone. We also have it so the rock stars print in a different color if it opens inside the zone, just to make it that much easier to identify. So the rock star is our favorite trade setup because we started adding divergence to our speed tick trade setup. Now, the speed tick is when the speed tick trade is when my trading went from getting better to killing it, and I was able to go full-time as a full-time trader when I started trading the speed tick trade setup. The rock star is just some added confluence for a higher probability, and I'm always looking for more information, as much information as I can find inside these bars to tell me there's a high probability of something's going to happen here. Okay, and I told you how I did that on Thursday. So if you didn't watch the video on Thursday, you can go back and watch that. All right, so the speed tick trade is something we still trade because it was so good. All right, so the speed tick setup looks very similar. There's not a lot more you have to learn. It's really almost the exact same trade setup as a Rockstar, but we've removed the qualification of having divergence, and all we have here is again as a strong push, an overbought condition, a white or light blue speed tick, and this is absolute must. There is no way you can take a speed tick without major resistance. Okay, that is a given. There's no options for this speed tick without this resistance. This bar has to open 5 ticks or less from this line. Okay, so if it opened, if this bar was up here, price touched the edge of this zone, which is okay, and then pulls back, and then this opens, maybe down here at, is there 2 of those? Or is that my, oh, okay. We have indicators for that. This is called our FT reset line. This is one of our indicators that is in our packages that we have for you. This FT reset line also has relative strength numbers at the end of the line. For example, this would be a very strong line with a relative strength number of 205 at the end of it. We would expect if price approaches this line in a strong way like this, straight up, that this line is going to react really well, or price is going to react really well to the line. So those are our FT reset lines. We call them FT reset because every time price hits this line, it resets this number to 0. So then if price hits the line, this line will never be as strong as it is when it first gets hit after an extended period of time, because people still don't know what to expect from this line. Okay, so they're a bit reluctant to cross that line. But after price hits it for a while, it becomes weaker. Think of it as like a fly on a screen door looking for a hole. It keeps hitting that screen door until it finds a hole and gets out. That's kind of what price will do if this number is particularly high the first time it hits it. So this is our FT reset. This bar open, and let's say it's 6 ticks from this resistance. Well, if we have a 7-tick stop, that's not really giving this line much chance to work, is it? It'll come up here and maybe price, we're at 6 ticks, we entered the trade. Price comes up here, tests this line, and when price tests these resistance lines, sometimes it'll go across a couple of ticks, and then it pulls back, right? Well, you're going to get stopped out without really having the opportunity for this line to help you much. So we want price to hit the line, or at least inside this zone, and this bar to open below it 5 ticks or less. Now we have a trade. Okay? Now we have a trade. We're going to short it right here as a speed tick trade setup. How about now? Anybody? How about now? Exactly. Because I'm not convinced that price is just going to blast right through that line and keep going, because this big blue speed tick has me concerned that something else is going on potentially. All right, I'm going to throw you a curveball. And for those of you that this is your first time here, you won't know the answer to this. Whoops. What about that? This bar opens right here. What am I going to do? Come on, trade room traders. You know this. What am I going to do here? Nothing. No trade. Why? Because I had a big blue speed tick here that's already given me a heads up that something wacky is going on in the markets. And just because the orders have slowed down, they were still going really fast just a minute ago. So fast, I really didn't have a handle on what's likely to happen next. So this is just telling me that this is a slowing process. So this, to me, is just an extension of this. So I don't trade this trade. I wouldn't short this here because this big blue speed tick disqualifies that trade. Okay? Here's the next scenario. Looking for the right bar. I can just make a copy of this one. What about that? Am I going to trade that one? I will absolutely trade that. I will sell it right here. Because this bar did not have any speed ticks on it. Everything happened inside this bar and then it stopped and it went back to normal trading. Normal orders being processed. So as long as there's a bar after a big blue that has no speed ticks on it, then the next speed tick I will trade. Exactly. It broke the chain. It's a different manipulation than what was going on here because everything stopped. Okay. Price went back to being, orders went back to being processed at a typical rate. So now I've got a new speed tick, which is likely a new manipulation, has nothing to do with what was going on over here, and I will short that right here. And how about now? Nope. No resistance. We'll never take a speed tick trade with no resistance. Did I say never? Well, what a nice segue, right? I would never take a speed tick trade without resistance, but we have developed a new indicator that allows us to take now what we're calling naked speed tick trades. Okay? We now have our climactic volume indicator. That's what this is. If we have climactic volume and an overbought condition or pullback alert, we now have enough confluence suggesting that we also have another indicator. We'll have to talk about that later. It's just a yes/no indicator that tells us if the but this is too small to show it today. If you have a yes/no to enter the trade, if these wicks are real long, we're not going to enter the trade because the price action inside the bar is too crazy. Let me make this a little bigger. This, yes, Connor will send it out later today or tomorrow. This is now a trade we will take. Oh, wait. Almost got caught on that one. Remember the ricochet? We talked about it a few minutes ago at the beginning. This ricochet is really important on this trade setup. This is also telling us that the acceleration of the orders went from practically nothing on this bar to really fast, like a drag racer. Okay? This is something that I noticed when I was developing the speed tick indicator, that sometimes price didn't hit the threshold. I mean, the orders being processed didn't hit the threshold of speed. Maybe let's just use 100 miles an hour. Maybe it didn't hit 100 miles an hour to print a speed tick, but it went from 0 to 80 in a heartbeat. Well, I noticed that when that happened, we very often got a pullback. So that's where this ricochet came in. I went and studied these setups, these naked speed tick setups, and I do thousands of examples to study the probability. I do the data. I don't just look at these and go, oh, well, this looks like a good trade. I'm going to try it. I'm a professional trader. This is what I do for a living. I don't have the luxury of going, hey, this looks pretty good. I think I'm going to try it for a while. You know, I've noticed this happening. I think I'm going to try this trade for a while. I don't have that luxury anymore because my income relies on me knowing I have an edge. And the only way to know you have an edge is to test. And when I say test, what I mean is when I create a trade setup, the whole thing starts with a theory or a hypothesis. And I say, okay, when I see this and this and this happen, I think price usually does this. So I'm going to test that theory. Here's what I do that's probably different than what you do when you test. I am trying my best to do everything I can to disprove my theory. Okay? Used to be what I wanted to do was prove that my theory was right. And it's really funny how we can talk ourselves into proving we're right, particularly men, right, Rochelle? we we can prove we're right very easily. We'll make allowances to prove right. But if you approach this to prove it's wrong, you'll probably come up with a better system. If you have a hypothesis or a theory and you can disprove it, you've just saved yourself a whole lot of pain and heartache. If you've tried to create your own trading system and then you found out, in theory, it worked really good, but in practice, actually trading it, it doesn't work at all. Go back and look at how you developed that system and whether you were trying to prove or disprove that it was a good system. Okay? I went and I looked at these naked speed tick trades, and we developed this climactic volume indicator. And I started noticing things. So I started writing things down. And I started adding criteria for the trade. One of which is it's got to have a ricochet on it. So I started testing, trying to disprove that this trade had a strong edge, and I was unable to do that. Therefore, this trade became a setup. This is now called, it's got to have this climactic volume on it. It's got to have the ricochet on it. It's got to be either overbought or have the pullback alert on it, preferably both. Then we'll trade it. And I'll short this right here without resistance behind it. Okay? Now, in order, and the same things applies. Now, we don't use the naked rockstar zone or that zone over here on the right that we had before. We don't use that for this trade. That's only for rockstar trade. Not to say that you couldn't. It's just not part of the criteria for the setup. Okay. In order in learning our trading systems, you're going to want to learn this first. Both the rockstar and the naked rockstar trades. These have the most confluence, and these are the easiest to trade, and these are the ones where you're going to build your confidence. As you become more confident with the rockstar and naked rockstar, start trading the speed tick trades. Okay? They're going to have resistance or support behind them. When you get good at those, then you can expand to the naked speed tick trades. And then there's one more trade. We're not even going to talk about it because a lot of our traders don't even trade it. It's the very first pullback trade I ever traded successfully and regularly, and it's based on these FT lines, these support and resistance lines, but that's way down the road. We'll teach you that another time. Not a lot of traders don't even trade it because it's pretty subjective and it takes a lot of experience. I'll still trade it in the trade room, let everybody know I'm trading it, but there's only a handful of traders that'll trade it with me. Absolutely. Oh yeah, that would be, you're talking about this climactic volume indicator. That would be an excellent criteria to add to your risk tolerance levels. I don't need it and I don't use it when I trade, and that's what I'm calling out in the trade room. But if you are more conservative than I am, which you should be initially, then you could absolutely make that a criteria. You'll take fewer trades, but the trades you'll take will have a higher probability of being a winner because you have more confluence that price is becoming exhausted and about to turn. Okay? That's a good question. Yeah, the more confluence you require on a setup, the fewer setups you're going to take, but the higher probability those setups are going to be. Does that make sense? You start stripping away confluences of information, you're going to get more opportunities, but you'll have also a little bit lower probability of it being a winning trade. So that's why I say that you've got to, you know, understand your risk tolerance levels. And those risk tolerance levels can certainly change over time and should change over time. This is all about building confidence. And as your confidence grows and as you gain more experience, you'll adjust and take trades that other people don't take because you've found another opportunity. You've relaxed some of the criteria. Think about driving a car, and when you were learning to drive a car, you learned very specific things that you have to do to drive the car. Well, over time, you actually become a better driver from experience, but you've dropped some of those requirements of what you needed to do when you were learning. Makes sense? This is the exact same thing. Yes, Ed takes practice. Here's and here's the thing about that. It's not uncommon for price. Let me see here. I thought I had a doji on my little works. Oh, yeah, I do. It's not uncommon for price to open, and while you're putting your limit order here, price backs up a little bit up to here. So not only have you placed a limit order here, that limit order became a market order when you tried to place it here, but you actually got filled up here as a market order. So the only time that a limit order doesn't get filled is if price does it. If you enter the trade here, if it just drops straight down. Okay? So there's an equal chance that it's either going to drop straight down or it's going to pull back up a little bit more before it drops. Okay? So you have an opportunity to actually get a better fill on a limit order. The other side of that is price drops straight down. You got a limit order here. It leaves you in the dust. You didn't get filled, and you got to wait for the next one. Never chase it. Never chase it. It started at 11, Mark. 11 a.m. Eastern Time. We've been at it an hour and 20 minutes. But we're just going to start wrapping this up unless we've got any more questions. Those are good questions, all good questions. Yes, and as far as it being done with one click, Ed, we use the trading domes, or I do. There are a few people in the room that still like to use Chart Trader. I don't. It's too slow, and you can't really move quick enough. And I know there are a lot of people that go, "Oh no, I'm really good with Chart Trader." I promise you, if you get good at Superdome, you'll never go back to Chart Trader. And a lot of traders have come to me and said, "Oh no, I'm good at Chart Trader," but they use the Superdome. They go, "Man, I don't know what I was thinking." The Superdome, so much better and more efficient to execute and manage trades. So we use the static Superdome. Any more questions? I see somebody typing. Now they're not typing. I find when Naked Rockstar set up at a higher low of the day gives me most losses when practicing. Seems many times it keeps pressing higher or lower, if that makes sense. Okay, so Steve, my question's going to be for you. How hard of a push? See, I will take 1 bar pushes or 2 bar pushes. You could qualify that. What he's talking about is this high of the day. We use that as minor supportive resistance, and that would still qualify as a rock star trade. Okay, so high of the day would look like this. That's on our charts. That's what we do. So even though we have we don't have major supportive resistance, we will use minor support and resistance. Yeah, so, okay, you've got a couple of choices there. Add more bars in your rules. Say, if it's going to hit the high of the day, it's got to have X number of bars, 3 bars, 4 bars. Connor, will you will you run that through the Spanish translator and tell me what that says? You can also add more confluence. I don't know how much confluence. Okay, good, good. Yes, we haven't had these as often the last couple of months. We do have some of them on our YouTube channel that we've done previously. So we do have these several times throughout the year, but it's been a little while since we had one. But you can find several more on our YouTube channel. All right, so does that help, Steve? I don't know. I would have to see. In fact, why don't you send me some screenshot examples of what you're dealing with, of what you're seeing, and I will give you some suggestions on ways that you might change your rules relative to minor support and resistance. And send it to support at the intent. Does that email that Connor just put in above yours? Any other questions before we wrap everything up? We have a number of traders here. All right, hold on. I'm going to stop projecting here for a second. And I'm going to reproject here. We do have a special offer for everybody that is not with us yet, trading with us yet. We got 3 bundles where you can save a bundle on any one of the 3. You can go to our website at secondbraetrading.com/exclusive-offer, and Connor put the link in the chat there for you. And you can invest in any one of these packages. This one in the middle here is our Einstein, and by far the most popular. I know we have some Einsteins here with us today, right? Anybody, any Einsteins here with us? I know we've got a bunch of Einsteins. Um, so that gives you all of the indicators that we have, all of the indicators that we ever develop. Our training program, our peer mentoring program. A few of you are in the peer mentoring program. How do you guys like the Einstein? Was that most of you that are in the Einstein upgraded to the Einstein? I think maybe you started out with a lower package and then upgraded, and then some of you just went straight into it. Gives you unlimited trade room. We have a bunch of add-ons for NinjaTrader that you get. Priority support, uh, the whole kitchen sink. Any indicator we develop for the trade room for the in the future, you get all of that. It's a one and done kind of thing. You don't have to uh, keep. We don't keep hitting you up for more and more and more. Once you're an Einstein, that's it. You've got everything we'll ever have, and we're continually developing. I'm working now on something completely new for our trading domes. I knew now that NinjaTrader 8 allows for columns. There's some really good opportunities for us there, and I'm working on that now. All of our VIPs will get that for free. This peer mentoring program is a new mentoring program that we're offering. It's free to our Einstein traders. Any other traders that want to get in the program, there is a fee for it. But for our Einsteins, it's free. Yeah, if you hear somebody talk about VIP, it's the same thing as Einstein. We just renamed it. So for those of you that are ready to go hit us up on the on our website and hit the Invest Now button, and it'll take you to the special offer, the special price, and I can come onto your computer and set everything up for you. If you want me to remotely connect, I'll install the indicators, install workspaces, install templates, all that stuff, and get everything up and running for you. So you just gotta let me know. And that's all I've got for you today. Unless you've got any other questions for me, we're gonna go visit the grandson. Oh, you're falling out of a plane today? All right, everybody. Well, thanks for coming, and I hope to see you all very soon. Bye now.